Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 6th of February. Starting off with the FTSE 100, which has finally done what we wanted it to do, which was to hit the top of that black rising trend channel from the autumn of 2023 at 87.20. That seemed to be a pie in the sky target even earlier this month, or earlier last month rather, but duly achieved today in the run-up to a potential interest rate cut today at noon, down to 4.75%. In fact, in Europe it's 2.75%, so obviously not a great advantage being outside the EU at the moment, at least on interest rates. Above 87.20, looking for 9,000. The upper parallel of that rising trend channel, the red line there, and we're looking for that by the end of next month, although obviously the way things are going, we might even get that by the end of this month. In the meantime, we'd like to see this market stay above that uptrend line from the middle of last month at 85.50, so above 85.50, looking for 9,000 here. Moving on to the DAX, and here the market giving us a bear trap island reversal, so gapping down and gapping up, which is incredible, especially when it's at the highs. You normally get that at the lows. And 22,100 the target for the end of this month, while we remain above recent support, 21,200. If we do break down, the worst we can see at the moment is the recent swing low near 21,000. On to the Dow, and here you can see we had two rebounds above a rising 50-day line, which tends to be a continuity signal on the upside anyway. And all we're waiting for now really is an end-of-day close through 45,000, basically the record highs, to take us up to the top of that rising trend channel from March last year. 46,500, looking for that by the end of next month or even sooner, while we remain above that 50-day line. On to Bitcoin, which has been slightly out of sorts over the recent past, zigzagging around, first between the 50-day line and the record highs around 109, and then between an uptrend line from November around 93,000 and the 50-day line. The negative at the moment is the way that we've had an RSI failure at neutral 50, and we've also got that 50-day line falling, and we need to watch out now for this market rolling over towards 90,000, although not expecting anything lower than that at this stage. Need to see an end-of-day close at least back above the 50-day line, just below 99,000, to get this market back on track. Moving along to gold, which has been firing on all cylinders in the recent past, and we were looking for potentially 29.70 by the end of next month, and we got all confident and went for 29.70 by the end of this month, and could be done, given the way this market is going. Recent resistance around 28.60, so while we're above that, looking for 29.70 by the end of this month. Moving along to the pound dollar, and here the Deutsche Bank sell signal on January the 10th, basically called the low. We've had a bull trap through the 50-day line, 125.10, and if you are a bear, then you'd be selling against that 50-day line, 125, and looking for a move down towards 121.22. The only problem is, I suppose, that today's fall for the pound may already be factoring in the interest rate cut. But the line in the sand here really around 126.60, which is the main uptrend line from back in the end of 2023, and the overall support, if we do break down, around 118, which is the floor of that 2020 falling trend channel. Moving on to the stocks, and not many of them, which may be a relief to some. Botswana Diamonds is the first. Here we seem to be bouncing off the floor of this falling trend channel there since the beginning of last year. Want to see an end-of-day close above the 50-day line there at 0.18. Above that, we've got a best-case scenario target up towards the top of that channel at 0.3 by the end of this month. The other point to note is that this is a bear trap gap reversal, so we went down to a new low and then filled the gap at 0.16, so that might give somebody some confidence that this rebound is not just going to be like all the other ones we've seen of late. Moving on to a stock which I'm still trying to work out exactly what they do, can't quite remember, but we've got Cambridge Nutritional with the gap higher that we had early last month through the 50-day line. We've held the top of that gap there at 3p and powered forward. The next stage is pushed through the 200-day line, 3.5p, and we're looking for up to 5p by the end of this month if we get lucky, and especially if we get the 200-day line starting to rise. Upside value while we hold above the 50-day line at 3.2 pence, and you can see also we've got RSI support above neutral 50. So this is actually looking quite good. On to Eurasia, which is probably the star of the show at the moment, largely because it's behaved itself and done exactly what we wanted it to do. First target here was 3.25 pence. Basically, above that we were looking for 4.5, and we've narrowly missed it today, which I suppose nobody's perfect, but we did actually do it by we gapped up today, and that is impressive given that we're near the top of the range, and we've actually had positive candles there for the best part of a week on that stock. But still looking for 4.5 pence over the next few sessions while we're above 3.75 pence. And I suppose if you're a fan of the shares and looking for greater glory, then the upper parallel of the upper parallel would probably be towards 6.5 pence. But let's see how we go in terms of getting to 4.5. But obviously quite a big improvement for the shares, already up 77% so far this year. So bit like the old days for that particular stock. Moving on to Ferrexpo, where the rug was duly pulled by the Ukrainian government, doing a bit of almost seemed to be like a sort of third world situation, the treatment of Ferrexpo. But current situation is that the rug was pulled, probably everybody was, all the weak hands were out. We managed to get back above the 200-day line at 63, which I think I pointed out yesterday. And I was looking for the resistance on the way up there around 85, 86 pence, which has actually been hit now. So what will be interesting now is whether the shares can make any progress above 86 pence on an end-of-day close basis. If they can, it would render or suggest that the rug pull this week was actually a false breakdown, but early days yet. MicroSalt is a company which I was quite excited about just a few days ago, and you can see why from the daily chart. We broke a triangle, and we've also got the 50 and 200-day lines both rising. The support recently just around the 74 pence level. While we're above that and above the broken November resistance line, looking for £1.10, perhaps as soon as the end of this month. Helped along actually by the RSI 50 rebound that we've just had. So a bit of a cork in water rebound yesterday for the shares. On to the last two, and the first one is Seascape, and here you can see a rising trend channel, top of the channel there heading for 60 pence, which we're looking for by the end of next month, while we remain above recent support around 31 pence. Also got the 200-day line rising. We come off the back of a golden cross back in the autumn in October. Be cautious, you wait for a break of the 38 pence area, recent resistance. Finishing off with Zenith Energy, who I interviewed at the start of the week, and they've got the fundraiser away as well. Looks as though we're bouncing off the floor of a rising trend channel there. It's good that we bounced above at 7 pence, above old resistance at 6.25. And while we're above 7 pence, looking for the shares to head to the top of that rising trend channel from November, as high as 14 pence by the end of next month, or obviously even sooner. That's it for me today. More updates tomorrow.